If you had $1,000 in capital right now and didn't know what to do with it or what to invest in, what would be the best decision in this situation? Because one wrong decision could even cause you to lose this $1,000 and even suffer up to a 50% loss. We are in one of the strangest economic conditions in history: high inflation, money printing, and economic wars. At a time when people's trust in financial systems has vanished, we need to know how to divide our capital among which currencies or assets and on what basis, which we're going to talk about fully in this video with real logic, not cliche talk. First of all, let me mention a very important point. Our goal here isn't just to get rich, but rather our goal is not to be eliminated from the world's economic game, and investing in these conditions means preserving value plus seizing opportunities from the market. Let's get to the heart of the matter and where we want to invest this $1,000. I've considered gold, silver, and two of the most valuable cryptocurrencies on the market, namely Bitcoin and Ethereum, for you, and I want to tell you how and on what basis you should divide this $1,000 among these assets. The first asset we want to talk about is definitely gold. Throughout history, gold has seen many risks, many ups and downs, experienced various wars, and what has always happened is that it's been able to maintain its intrinsic value due to the financial limitations it had. It's had great stability and has been able to remain valuable in the long run. That is, if you consider those around you who have invested in gold over years, decades, and even previous centuries. Gold has always acted as an insurance fund, an asset that gives you peace of mind about not falling behind inflation. For your specific portfolio, I've allocated 30% to gold so that you can invest in gold. Now, you can do this in various forms, such as investing in physical gold, melted gold that you can access, or ornamental gold and jewelry, which naturally, due to the manufacturing cost of that jewelry, results in you being able to save a smaller weight of gold, so I don't recommend it much. Or in the form of cryptocurrency gold. For example, we have cryptocurrencies like Tether Gold or the symbol XAUT and also the symbol PAXG, each of which is equivalent to 1 global ounce of gold or around 31.1 grams of gold. Make the purchase and keep it in your digital currency wallet. Never forget gold will close its case. We want to allocate 30% of our capital to it. But the second asset that could be useful for us, and I think has more risk among these four assets, due to the relatively high volatility shown over the past year, as well as in previous years, but it's always been considered the world's second metal alongside this. And now, given the expansion of artificial intelligence and other reasons that I'll explain later, it has gained significant value. It's definitely silver. From your $1,000 portfolio, we've allocated 30% to gold and we want to set aside 40% for silver. Silver, which managed to hit new all-time highs last year, even showed price growth up to $120. Now, in the $70 to $80 range, it's highly valuable for investment, and we can very easily and clearly talk about price targets of $100, $150, $200, and even higher for each global ounce of silver. Some digital currencies have been considered for buying silver, but I don't recommend them for now because they haven't shown enough credibility yet and their legal regulatory status isn't confirmed. These silver-specific digital currencies, but you can invest physically in 1 kilogram bars or through long-term trades and with low leverage even on the forex market and brokers, so you don't miss out on its growth. Now, why has it trended? Silver is being used in solar panels as well as in electronics and tech industries, and with the expansion of clean energy development linked to these solar panels, demand has grown. Now, what's the point? The issue is that the price of any currency or asset, like all others, depends on the simple concept of supply and demand, meaning the more demand we have with a fixed supply, the more the price increases, and conversely, the more supply we have with fixed demand, the more the price decreases. Now, a similar thing has happened with silver regarding this matter. Silver mining is done as a byproduct and not through direct extraction. Meaning its production cannot be directly increased. It has extremely high extraction costs, and we also have limitations on silver mining. These are among the reasons that have caused silver's price to grow and will cause it to grow even more over the next year or two, because its demand is growing according to the uses I mentioned, while on the other hand, the supply of silver has lagged behind. So 30% gold, 40% silver, and 30% of our portfolio that we still have left. We've considered gold for security and silver for being undervalued and at a price lower than its intrinsic value. But what should we do with our remaining 30%? I want to go for Bitcoin, the first cryptocurrency created in the crypto financial market, the most traditional blockchain, the most widely accepted among digital currencies on Linmaz that people around the world are using today. Its anonymity and essentially the independence it has from governments and financial systems, and the popularity it's gained all over the world throughout the past few years. Some countries are even using it as their official currency. Due to its limited supply of 21 million units and the rising demand as it becomes more widely accepted, it's been on a constant upward trend over the years and has managed to show significant growth. Right now, a price of $78,000 to $80,000 is actually considered a low and fair price for buying Bitcoin and investing in this digital asset, and we have much higher targets. But why are we suggesting a 20% investment in this coin? Because it carries more risk, since silver and gold are more widely accepted and people have easier access to them. But Bitcoin hasn't reached that level yet, so it definitely involves a higher investment risk as well. However, since it's the lowest risk among digital currencies, showing the least volatility and the smallest drops, and we want to grow our capital while maintaining an acceptable level of risk, I suggest that you definitely include Bitcoin in your portfolio as well. The final currency in this portfolio is allocated to Ethereum, with 10% of your wallet balance, which is $100. Because Ethereum is also known as one of the flagships of the crypto market due to its blockchain system and the smart contracts that can be built on its network due to DeFi and the financial applications built on it, and as that many currencies and projects continue to be launched on the Ethereum network, it has investment value. So let's look at our final mix. We've considered 4 assets in order: gold, silver, Bitcoin, and Ethereum, respectively 30%, 40%, 20%, and 10% of your portfolio balance. We chose gold for the security and financial insurance it has always provided us. Silver because it's undervalued and has a value higher than its current market price. Bitcoin because it's the future of the world's money, moving independently of the financial space and systems of government administration, and Ethereum, which is the future of the financial system given the software and powerful network it uses. But regardless of all the discussions we've had in this analytical video, you should keep in mind that regardless of this, our portfolio, always for your personal investments, don't put all your money into one market or one asset, and always diversify your capital. Have a scenario and set targets for different currencies. You might be happy to buy Bitcoin at $70,000, but definitely have a target of $100,000, $110,000, maybe higher or lower based on the analytical data. Keep that in mind. Don't make emotional decisions, and follow the scenario. I'm very glad you were with us. I'll be back with another video.